Everyone is staring at silver's price like it's the main show, scrolling charts, watching every tiny tick, thinking they're safe because the numbers haven't exploded yet. But here's the thing, the real crisis isn't happening on the charts. It's happening off-screen, in a place most investors never look. This is Macro Signal, and today we're going to uncover what the mainstream misses while everyone is distracted by the glimmering numbers. Before we dive in, hit that like button, subscribe, and make sure notifications are on. You want to miss a single signal we reveal in this video. Now, let's start with the simple truth. Markets are never as calm as they appear. You might open your trading app and see silver holding steady, a few cents up or down, the usual chatter online, headlines trying to soothe your fear. But that calm is a trap, a signal that the real forces are moving silently behind the scenes. Governments, banks, and private investors with far deeper pockets than any of us are positioning themselves quietly, away from the cameras and away from the headlines. The moves they're making right now will define the next months, maybe even years, of wealth and financial security, and most people won't see it coming. Imagine a shadow market where trillions of dollars shift in whispers, agreements signed in rooms without windows, decisions that will echo across the globe. This isn't fiction. We've tracked patterns, we've analyzed flows, and the signs are undeniable. Macro Signal has been following these subtle signals for months, connecting dots most people don't even know exist. And what we see is alarming. While retail investors debate price movements, a different story unfolds quietly, one that could rewrite the rules of silver and precious metals forever. Let us break this down in a way that makes sense, even if you spend all day watching financial news. The safe silver market you see is only part of the story. There's a massive network of activity happening in over-the-counter trades, cross-border exchanges, and institutional maneuvers that don't show up in the usual charts. These are the forces shaping the next big move, and they're already in motion. While social media buzzes about small price swings, the foundation is shifting beneath the entire market. Here's an example. Recently, a surge in physical silver demand went almost unnoticed by mainstream outlets. As big players quietly moved tons of silver from one market to another, strategically creating scarcity in certain regions. On the surface, prices seemed normal, but underneath, liquidity pressures began to build. This is classic setup territory. And here's the kicker. By the time the average investor notices, the game has already changed. Macro Signal has highlighted these movements before they became obvious, giving our viewers a head start on what's coming next. And it's not just about numbers, it's about timing. Every decision in these hidden markets is calculated to maximize impact when the public finally realizes something is wrong. That means weeks, sometimes months, of invisible preparation. Meanwhile, the average trader focuses on minor swings, thinking they understand the market, unaware that the real shift is quietly gathering momentum. As we continue, you'll hear stories of how these hidden moves connect to global policies, central bank maneuvers, and even private agreements that never hit the news. By the end of this video, you'll have a complete picture of why silvers.com is misleading, why the real crisis is off-screen, and what signals to watch that could protect your wealth and investments. Remember, stay engaged. Comment below if you notice unusual trends in your area. Share this video with friends who need to know. And keep that like button active, because every share strengthens this network of informed viewers. While most people are busy reacting to daily silver price updates, Macro Signal has been tracking the subtle signals that actually matter. These signals aren't in your average chart. They live in the flow of physical silver, the quiet accumulation by institutions, and the hidden trades that rarely make headlines. Think about it. If the biggest investors move without warning, retail traders see nothing until it's too late. And that's exactly the setup happening right now. Take, for example, a recent wave of silver withdrawals from global warehouses. Official reports barely mentioned it, but the physical metal leaving storage tells a story the charts can't. Macro signals analysis shows that these withdrawals are concentrated in strategic locations, signaling a potential supply squeeze. It's the kind of subtle move that can go unnoticed for weeks, giving insiders a massive advantage. Meanwhile, everyday investors are distracted, debating minor swings, unaware that the foundation of the market is quietly shifting. This is where timing becomes everything. Every major market move, every crisis, begins with invisible shifts, long before public panic sets in. Those who recognize patterns early, who follow signals like we share on Macro Signal, have the chance to act before chaos hits. And the irony, most people assume they're prepared just because they follow prices on an app. Reality check: price alone is just noise. The story is happening in the background, in trades you don't see, in agreements never reported, in strategies too complex for the casual eye. Now, you might be wondering, how do we even spot these hidden currents? It starts with understanding the flow of information and the movement of assets outside the spotlight. Physical silver shipments, cross-border transfers, and unreported trades are all pieces of the puzzle. Each movement may look minor on its own, but when combined, they reveal the real setup for a potential crisis. Macro Signal has been mapping these movements, showing patterns that indicate the calm you see is temporary. It's a deceptive lull before something much bigger. And it's not just numbers or charts, it's psychology. When the public sees calm, confidence grows. People enter the market thinking everything is fine. But confidence in the manipulated calm is the perfect environment for the next storm. Institutions exploit this by positioning themselves quietly, letting the average investor maintain a false sense of security while they prepare for the shifts ahead. Let's get practical. If you're watching silver just on price, you're missing critical signals, storage levels in major hubs, the timing of institutional purchases, and even political and economic decisions that influence supply. Macro Signal has been compiling these signals for months, and we're now entering a period where early recognition could mean the difference between staying protected and being caught off guard. The next part of this video will take you inside these hidden patterns, exploring exactly where the pressure points are forming, what major players are positioning for, and why you must pay attention even if the price seems calm. By staying with us, you'll see the invisible forces shaping silver's next big move, and understand how to navigate this off-screen crisis without panic, but with informed action. Remember, if you're finding this useful, like the video, subscribe to Macro Signal. Comment below if you've noticed unusual patterns yourself. Your input helps everyone see the bigger picture. At this point in the story, something important needs to be clear. Every major financial shock in history looked boring right before it happened. No sirens, no warnings. It's just quiet signals that only a few were paying attention to. And right now, silver is sitting in that exact zone. The price looks stable, even forgettable. But the pressure off-screen is building in ways that can't stay hidden forever. Macro Signal has seen this pattern repeat again and again across different markets. And the setup never ends well for those who rely only on surface-level information. One of the biggest misunderstandings about silver is the belief that supply is always available. On paper, it looks abundant. In reality, accessible physical silver is far more limited than most people realize. A large portion is locked into long-term contracts, industrial use, or strategic reserves. When institutions start pulling physical metal out of circulation quietly, it creates stress that doesn't show up immediately in price. It shows up later, suddenly, when demand spikes and supply can't respond fast enough. When calm turns into chaos. Behind the scenes, large players don't chase price, they chase positioning. They move early, when nobody's watching, because that's when risk is lowest. Macro Signal tracks these early moves by watching where silver is moving, not just how much it costs. Lately, the movement tells a story of preparation, strategic accumulation, reduced availability, and a growing disconnect between paper, silver, and real, deliverable metal. That gap is one of the most dangerous signals in any commodity market. Here's where psychology comes in. When prices stay calm, people stop paying attention. They delay decisions. They assume there's time. Institutions understand this perfectly. Calm markets create complacency, and complacency creates opportunity for those who know what's coming next. By the time headlines change their tone, positions are already set. The public reacts late. The insiders act early. That's not opinion. That's how markets function. You might be thinking, this sounds dramatic, but history supports it. Every time a market disconnect grows between what's visible and what's real, something eventually breaks. Could be a delivery failure, a sudden policy shift, or an unexpected surge in industrial demand. The trigger is never obvious in advance. What matters is the pressure that's already there. And right now, silver is under more off-screen pressure than most people are willing to admit. This is exactly why macro signal exists. Not to scare you, not to push hype, but to help you see what others overlook. The real edge in markets doesn't come from predicting exact prices. It comes from understanding structure, incentives, and timing. Structurally, silver is entering a phase where small triggers could produce outsized reactions. As we move forward, the next part of this video will connect these hidden silver dynamics to the broader global picture currencies, debt, and why precious metals tend to react when confidence in the system starts to wobble. Stay with me, because this is where the off-screen crisis begins to make sense as part of a much bigger story. And if this is already changing how you look at silver, drop a comment below. I read them, and they help guide future macro signal videos. To really understand why silver's calm is dangerous, you have to zoom out and look at the global system it's sitting inside. Right now, the world is drowning in debt. Governments are rolling over old obligations with new borrowing. Currencies are being quietly diluted, and confidence is being held together with words instead of fundamentals. On the surface, everything looks managed. Off-screen, the pressure is immense. And this is exactly the kind of environment where precious metals start to matter again, not suddenly, but all at once. Macro signal has been tracking how central banks and large institutions behave when confidence in paper systems begins to weaken. They don't make announcements. They don't warn the public. They rebalance quietly, increase exposure to hard assets while continuing to talk about stability. Silver plays a unique role here because it sits at the intersection of money and industry. It's not just a store of value, it's a necessity. And when financial stress meets real-world demand, things can move faster than most expect. Currencies don't collapse overnight. They erode slowly, then suddenly. Small policy decisions compound. Temporary measures become permanent. And every time trust is stretched, the system relies more on perception than reality. That's when off-screen assets start absorbing pressure. Silver doesn't react to headlines. It reacts to stress. And right now, stress is building in places most people never see. Another overlooked factor is energy and production costs. Mining silver isn't getting cheaper. Regulatory pressure, energy prices, and geopolitical risk are all tightening supply. But again, this doesn't show up immediately in price. It shows up later, when supply can't respond quickly enough to a demand shock. Macro signal looks at these constraints not as isolated issues, but as part of a system slowly losing flexibility. And systems that lose flexibility tend to snap, not bend. What makes this moment especially dangerous is the disconnect between confidence and reality. Markets are being reassured daily. Inflation is under control. Growth is stable. Liquidity is available. But behind those words, emergency tools remain in place. Balance sheets remain bloated, and structural problems remain unresolved. Silver doesn't care about narratives. It responds to math. And mathematically, the pressure keeps rising. This is why watching price alone is misleading. Price reflects today's emotion. Structure reflects tomorrow's reality. Macro signal focuses on structure. the incentives driving institutions, the constraints limiting supply, and the risks hiding behind calm language. When those forces align, moves can happen quickly, violently, and without warning. As we approach the end of this video, the final part will bring everything together. The calm price, the off-screen pressure, the institutional positioning, and what signals actually matter going forward. Stay with me, because understanding the ending of this story is what separates reactive viewers from informed ones. And if this perspective is resonating, make sure you resubscribe to Macro Signal and share this video with someone who still thinks calm markets mean safe markets. Now that we've traced the off-screen movements, the hidden pressures, and the global context, it's time to connect the dots. Silver isn't just a metal, it's a reflection of real-world stress, liquidity pressures, and institutional positioning. What looks calm today is actually the eye of a storm forming quietly. Macro Signal has been tracking these signals for months. And if you've stayed with this video, you now have the edge most investors will never get. The next move in silver won't surprise everyone. It will surprise the unprepared. Those who understand the off-screen story, the structural signals, and the timing advantage can see the setup forming in real time. Look for subtle clues, physical silver shipments, unusual accumulation patterns, and market sentiment that doesn't match underlying supply constraints. These are the signals that matter, the ones Macro Signal highlights, because when the crisis finally shows itself on price charts, it will move faster than anyone expects. At this stage, it's also about mindset. Don't get caught reacting to headlines. Reacting late is expensive. Instead, focus on understanding patterns, timing, and positioning. Small, informed steps now can prevent big losses later. That's the essence of Macro Signal, turning complex, hidden information into actionable insights for real-world decisions. Remember, the calm we see is deceptive. Every major financial shock in history looked calm at first. The system gave no warnings, but those watching carefully, those tracking hidden flows and patterns, were prepared. Right now, silver is telling a similar story. The calm is a signal, not reassurance. The real moves are off-screen, and those who ignore it will be the last to act, while those who follow signals, like the ones we share, will have the advantage. Before we finish, here's what you should do. Stay alert. Track the indicators we've highlighted, and use this knowledge to make informed decisions. And importantly, engage. Comment below with what patterns you're noticing. Share this video with friends who still rely only on price charts. And like it if this has given you a clearer picture. Engagement matters. Your comment or share could help someone avoid a costly mistake. Macro Signal, ES&T, just about watching numbers. It's about understanding the hidden story behind them. And that hidden story is exactly what separates informed investors from those who get blindsided. Silver's calm may be tempting,